Hi, my name is Ilya Zlotnik, advisor and partner with Vivaldi Capital Management. And welcome to today's conversation on buying and selling a home with Scott Ottenheimer. Scott leads up one of the top teams, real estate brokerage teams at Baird Warner. Scott, welcome to today's conversation.
Thanks, Ilya. It's great to be here.
Likewise. Today's an interesting time for us to have a conversation on buying and selling real estate. It's a very difficult environment for a lot of buyers, really the most expensive time to own a home. Interest rates continue to be high, looking at about 77% for a 30-year fixed. Inventory continues to be low. Sellers don't want to sell. A lot of them have historically low interest rates that they might never see again. So we'll talk about what you make of that soon. But before we get into that, would love to hear your story about how you got into doing what you do.
Sure. So my journey has been interesting. I started in corporate America. Actually, I started my career in strategy and management consulting. Worked there for a number of years. Pivoted to corporate America, where I was at a large insurance carrier. Ended up getting married and was fortunate enough to inherit $200,000 of student loans, and I wanted to get those paid off as quickly as possible. And so all I knew how to do was work more, right? And so I had my real estate license, decided I would join a boutique brokerage and try to make some extra money. And I started with renters, and my renters turned into buyers, and my buyers turned into sellers. And so it's interesting because a lot of realtors don't like to deal with renters because you don't make a ton of money. But if you do it honestly, right, and you try to make sure that you are saving your client as much money as possible, because back then, and still even to this day, the more you spend, the more a realtor makes, right? And so if you can be a fiduciary and you can make sure that your client is getting the best value at the place that they want, they're gonna be clients for life. And that's kind of how I built my business. And so was very fortunate, was able to pay off my wife's student loans, was able to take my commissions and turn it into investments, whether it be Chicago-based startups or real estate in Chicago. Moved to another corporation, another large insurance carrier, and eventually gathered the courage to leave during arguably one of the worst real estate years that we've had, and do it full time and build my team and continue serving my clients.
Absolutely, that is a risk, but I guess without risk, there's not reward, and it's something you love doing. Clearly,
it is. It's you have to wake up and enjoy what you do while you make money, and I think real estate is a good way to do that. Being able to advise people, being able to be hopefully a little bit different. So in my corporate job, I was very analytical, data driven, and try to bring that to real estate if I can. So.
Yeah, I mean that's the right way to do it, right? You have the data, and then you have the ability to work with people, and if you can combine those two, that's how you be successful long term.
Right. I think it's hard to find people who can not only analyze data but turn data into a story, but then also grab a beer with them after and have a good time.
Yeah.
When I was consulting, we would always do the airport test, which was, can we crunch numbers during the day, but then if our flight is delayed at the airport, can we grab a beer and have fun? And so it is hard to find people that can do both.
Yeah, I suspect in your line of business, because it's very sales oriented, you probably get the people that are very good at grabbing beer, and it's very similar in my industry. But if you can combine the two, right, and have that analytical background, then you've got an extra booster.
It is true. It's true, and I need to do a better job being more social. I probably need to do more networking events, maybe even drink more. I probably don't drink as much as I should. For this job, might be a good thing. I understand it before you were interviewing me, you were interviewing a health and wellness coach, so they may say the opposite. But you kind of learn as you go, and you develop your own niche.
Yeah. Well, my technique is you get sparkling water with the lemon and lime and a few ice cubes, and nobody knows the difference.
Well, so that was a secret. I did that last night. I was actually at the Illinois Holocaust Memorial Awards, and I didn't want to drink too much, and so soda water was my little trick.
That's smart. Well, we talk. I started off saying we're in a difficult environment,
Yeah.
especially to be a buyer. We're curious to get your thoughts on being a seller. And you said you've entered this environment, it being the most difficult for your profession. So what do you make of this? How does it change?
Well, I think it's a good question, Ilya. I mean, I think it depends on the market, right? So if you are looking to buy in the suburbs, it's very tough for a buyer. It's fantastic for a seller. I mean, it's unbelievable. If you're looking to sell, a luxury high rise in Gold Coast, it's really tough for a seller and a lot easier for a buyer. And so when people ask me about the market, I always ask them a question back, which is, which market are we talking about? And that's really important to know and to differentiate. When we look at the Gold Coast, River North luxury real estate market, it's different. It's different than the suburban market. A lot of people are going to the north suburbs, the west suburbs, the North Shore, and there's not a lot of inventory. You're right. Interest rates are high compared to where they used to be, right? So in our generation of when we were buying homes, interest rates kind of hovered as low as 2.5% to, my first home that I bought was 5.5%. Now they're around 6.5%, 7% for a 30-year fixed. And, that's a little bit of sticker shock for us. But when our parents bought places, that was around 14, 15%. So it's so I think I read somewhere the average 30-year fixed mortgage over the last 30 years has hovered around 7.5%. And so we're around the average. It's just how fast it shot up that has scared a lot of people. And I don't blame them.
Yeah. I mean, it's anchoring bias. And then also, at the end of the day, is what you said, it continues to be location, location, location. That really matters. But what's interesting and is a huge benefit for buyers, now that I think about it, is you could always refinance. And that's a big, tailwind to some extent. Yeah. Are rates going to go down? It's hard to say. You'd think eventually they might go down, but who knows? And if they do go down, you could refinance. So that's not necessarily a reason to hold off making a purchase.
I think any lender will tell you to marry the house, date the rate.
Yeah, okay. I like
and
that.
It's clever. But I think, again, when you look at the analytics, right, you look at the data behind it, when you refinance a mortgage, you're re-amortizing at 30 years. You're paying a lot of interest up front again. The average homeowner stays in their house for between 5 to 8 years. I think the average is maybe 7 years right now. And sometimes it doesn't make sense to refinance even with a lower rate because you're paying interest, pretty heavy interest up front. Yeah. So it really depends on how long you stay in your place, how much principal you're paying down. Sometimes it might make sense to actually recast, right? Instead of refinance, recast a mortgage where you pay a sum of principal and you basically re-amortize your mortgage. So not re-amortize, but if you had a $100,000 loan at 7%, your principal and interest are based on a $100,000 loan. But if you recast it, you maybe pay $10,000 in principal, for example, and now your loan payments, in theory, are based on a $90,000 loan. And certain banks will do that for you. Sometimes there's a fee, sometimes there isn't a fee. But that's another trick that you can do to reduce your payments. So there's a lot of tips and tricks that people don't realize. And a lot of times, certain lenders don't want to refinance you. I'm going to get in a lot of trouble with my lending friends. But a lot of lenders may not want to refinance you, quickly after you buy a place, because I don't know how compensation works for loan officers, but as I understand it, you have to hold on to a mortgage between 3 or 6 months. And if you refinance in between that, you don't get your commission on the mortgage. So, but there's different tips and tricks, I suppose, to making housing more affordable. Refinancing is certainly an option, but not always the best case scenario, especially if you're not going to be there for the long run.
Mm-hmm. Yeah, I had a similar situation where I bought a place, ended up moving out, and I got an ARM. Mm-hmm. And in hindsight, I wish I fixed it. Got the 30-year fixed. Yeah. I ended up owning the place a lot longer than I wanted to. Triggered the ARM. Rates went up. because I was no longer living there and I was an investor, the arbitrage between refinancing didn't make sense because I had to pay like 100 to 200 basis points more.
Correct.
I knew I was eventually going to sell it. So I kind of just, I guess sucked it up and moved on, but I ended up selling it. All right, so let's talk about buyers. What's your process with working with buyers, and what are some key things that buyers often overlook that you can help them with?
So I'll ask you a question back.
Okay.
And are we talking about residential buyers for primary residence, or are we talking about investors?
Well, let's start with residential buyers, and we could talk about investors later.
So on the residential side, things that we look at in terms of the process. One, it's the initial conversation, right? What are you looking for? Where do you want to live? What's your budget? What's important to you? Give me your wish list, right? So we get kind of the emotional component. And so we learn about what they're interested in buying. Then we talk about, okay, are you qualified to purchase? So one of the things that I like to do with all of my buyers, which I think is a little bit different, is I like to make sure that real estate is a percentage of their portfolio and not their whole portfolio. I don't want somebody to overextend themselves, right? I don't want to sell their place in 3 years because they can't afford it anymore. And I sold them a place that I got, a commission on, and it wasn't the right place for them. I want to do what's right for my clients. So I very much encourage my clients to either put me in touch with their either accountant or their financial advisor to look at the entire picture. And of course, you like that I'm talking to a financial advisor, right? But I think it's important. And I think that more realtors need to do that and look at the overall picture rather than just say, hey, let me open a door for you, right? But when it comes to the buyers, so we'll work backwards from when they want to move, if they need to sell a place in order to move, and we'll work on different strategies as to what would make sense for them. Depending on how they answer their question, the buyer questionnaire that I have. But in general, ask them a number of questions as to what they want, where they want to be. We start the tours, so we'll look at properties. We'll narrow some down. I mean, I really like people to be laser focused on where they want to live, and that way, when I look at properties, there's 3 types of properties that I like to look at for people. One, the ones that are on market, right? Those are on the multiple listing service. Everybody has access to them. The private market, which again, most things are on the MLS, even on the private market. It's not really private anymore. So that's number one. Number two, I ask my clients, do you want me looking at off-market properties? So for sale by owner. Do you want me to reach out, send postcards, knock on doors, figure out, hey, I have a client who wants to buy your house, or who's interested in your area. So are you looking for on-market, off-market, or land for new construction? And so we focus on an area, and then we focus on the type of house and what kind of service my clients want me to provide. Most of them have said, yeah, we want you to look for everything. And that's where, and I know we might get to this, but the industry has changed a little bit. Where when you're working with a buyer, and it really hasn't changed much, but there's been a lack of transparency in the real estate industry. And so when you're working with a buyer, you want them to sign a buyer-broker agreement, which outlines, this is how I'm going to be compensated, this is what I'm going to do for you, and this is what I expect you to do for me. It's a contract. And there's different options with that contract. It could say, hey, I'm going to be compensated only by the seller. And when I say compensated by the seller, the reality is if someone didn't work with a realtor, they could probably negotiate out that commission. And so they're technically compensating me. But if I find you an off-market place that's not compensating me, will you compensate me? And I think all but one client that I've had has said, of course, we want to pay you for your service. Now, commissions are negotiable. And so I always appreciate the conversations when I have clients negotiating commission with me. And there's different options. And so I think when working with buyers, I think it's about being transparent about who's paying who, what the process is, starting from finding a house to closing on a house. And I walk them through the entire process.
Will you work with clients that want to work with multiple brokers?
I can't.
Okay.
I can't. So, so it's illegal for me to interfere with another buyer-broker relationship. So I'll give you an example. So I have a team, and we have Zillow leads. And the first question I ask when I have a Zillow lead that comes in is, are you working with another agent? And if that answer is yes, that's it, right? I can't interfere with that relationship. Now, if they say yes, but we'd like to fire them and work with a different agent, that's a different story.
Is that a legal thing, or is that a Baird Warner thing?
No, it's an ethics thing.
Oh, it's an ethics thing.
National Association of Realtor, Illinois Association of Realtor. You can't interfere with an existing relationship. Now, if you terminate the relationship, and the buyer-broker agreement that I have, you could terminate for convenience really easily. It's pretty easy to terminate those. So, but I want to work with people who want to work with me and who are ethical. And look, if someone's going to leave their agent just like that after talking to me, you want to make sure that they won't leave me after talking to another agent. So I think the loyalty kind of goes both ways. And I think you need to interview clients as much as clients interview you. It has to be a good fit for all parties.
Absolutely. I did a short stint in the commercial real estate space, and maybe I guess it's more of an ethical thing on the residential side, but I believe in commercial real estate, you could represent somebody that might have other representation, and it creates these weird conflicts of interest because you might do all this work and you might not get paid. Mm-hmm. But at the end of the day, like you said, you want to be comfortable with the people you work with, right. And if they're not comfortable working with you solely, then it's not a good fit.
Well, and you could work with multiple agents if it's in writing, mm-hmm. and that everything is disclosed to the client, agent number one and agent number two. And then when you're submitting an offer, it's really one agent submitting that offer, not multiple agents submitting the offer for the same client.
Okay, so those are buyers. Now for sellers, what's your process with sellers, and what are some or a few key considerations sellers often overlook that you can help them with?
Yeah. So similar to buyers on the residential side, your sellers as well, you want to ask them why are they selling? Where do they want to go? What are they looking for? In an agent, what are they looking to get out of their house? What's important to them? Are they looking to sell quickly, or are they looking to sell for more money, right? So a lot of the data that I provide to a seller, there's a direct correlation between price and days on the market, right? Lower the price, lower days on the market, higher price, higher days on the market. And so we walk through where they want to go if they're moving, why they want to sell, and then give them options as to what they can do. We can do a pre-inspection of the house so we could figure out what needs to be fixed before we put on the market. We could put together different marketing strategies, who we want to target market, whether we want to do it on the private market or whether we want to do it on the public market and get an open house going. How we want to market, whether we market on Facebook, MLS, retargeting with Google ads and search. So it really depends on the seller.
Why would a seller want to only do private market listing versus public?
Well, let's say a seller wants to move out of the city and go to the suburbs, and they have a 3-month-old baby, mm-hmm. and they don't want a whole bunch of people in their house disrupting them. Mm-hmm. They want just minimal showings. That's why they would maybe go on the private market. Or sometimes it's to create a little bit of a buzz of, we have this exclusive listing, and so we're trying to create a buzz for when we do go public, that we've gotten all this excitement. Or, hey, we'll go on the private market, we'll test the price at a higher price, we'll get some broker feedback, and if the brokers say, hey, it's priced a little bit too high, and we don't get any offers, then we know we've just tested the market a little bit, we'll price it a little bit lower when we go on the market. And so there's a variety of reasons why we would go public versus private.
Makes sense. One technique I've seen brokers use, and I want to get your thoughts on this, is coming in and overpricing the home and maybe overpromising to win the listing. Yeah. And then not being able to sell it at that price and having to knock it down.
Yeah. I think that trick happens. Sometimes it's the broker, sometimes it's the client, right? I've been in situations where a broker has promised a high price and then not sold it and then convinced them to do a price reduction. Whereas, I didn't get the listing and then it ended up selling at the price that I had recommended they sell it for. And then there's been other situations where I'd recommend a lower price and, the client disagreed with me, still hired me, priced it too high, and it said it sat on the market. What I tell the majority of sellers, not all sellers, but the majority of sellers, if we're looking between the, we'll call it the $400,000 to $1.5 million range, is that for the most part, not all the time, but for the most part, if you overprice a home, the market is going to reject it, right? If you underprice a home, the market will correct it. And I've seen it so many times where if you underprice a home just a little bit, the value is driven up because of bidding wars, multiple offers, the internal competition. And
it probably depends on the environment. We're in an environment where there's a lot more buyers than sellers. And you're going to get a lot more eyeballs versus if you're overpricing it, people aren't buying it, staying on the market later, and then people are going to think, why is it on the market for so long?
Right. That's exactly right.
Yeah.
But even in a good market, like a really good market for a buyer and a bad market for a seller, price is the most important thing when selling a home. I mean, every real estate agent's going to say they have the best marketing. Every real estate agent's going to say they're the best negotiator. They have the best communication, right? Where I find agents need the most improvement is on the analytics and on the data. And so what is the probability of your home selling within X amount of days if you list at X price versus Y price? And that's where I think the data comes in, because you could predict pretty accurately what you price at and how long it's going to sit on the market.
Yeah, you think so? Okay. So we talked about buyers, we talked about sellers for residential.
Yeah. And there's one more thing that I just want to add.
Okay.
Both with buyers and sellers, and this is what people, don't forget. I'm gonna give away a little secret that I use, and that is when we make an offer on any place. If I'm representing a buyer, for example, I always call the other agent, which not a lot of agents do. They just submit the offer and hope that they get it. But you always ask, other than price, what is important, right? Because price is just one component, right? There's when do they want to close? There's tricks of, let's say I'm flexible on my move date and the seller wants to close in June. Maybe we can make a lower offer and say, hey, we'll close in 15 days. We'll close in 30 days and we'll rent it back to you for free, right? Giving you a free place to live before you move. Yeah. So I think terms are really important, really overlooked by a lot of realtors. And so the same thing on the seller side. You can get an offer for a $500,000 place. You can get $1 million offer, right? But they have a mortgage contingency, attorney review contingency, inspection contingency, right? You could sneeze the wrong way. The seller can sneeze the wrong way, and then the buyer could walk away from the property and get all their money back, and you get back on the market. And so it's very important that when you are selling, you're looking at not just price, but the terms as well.
Yeah, and the person that's buying it, right? And if they're qualifying, or if there's a cash offer, all that.
Well, right,
kind of
and
stuff.
that's where if you get a pre-approval, if I'm selling a place and I get a pre-approval, I'll call that person's lender, and I'll get a sense of whether or not this is a real pre-approval, or if it's like, oh yeah, we just put numbers into the system using a fake salary and it told us we could afford a $10 million place.
I suspect that happens quite a bit.
It could.
Yeah. Well, there was a time when there was a lot of fraud, right? Pre-great financial crisis in the space, but a lot of that hopefully has washed out.
I hope so. I read an article once, and this was a long time ago, but apparently there was a lot of mortgage fraud in the Chicago area, and that's why they built the FBI field office off of Roosevelt, was because of all of the mortgage and real estate fraud. I don't know if that's true or not, so someone who's watching will have to fact check me, but it's definitely interesting because it certainly happens.
Actually, you might enjoy this. I just listened to a podcast. I think it was Lex Friedman was the interviewer.
Okay.
He interviewed a guy who was in federal prison. He's out, and he's kind of reshaped his whole life, but he built his whole entire career on mortgage fraud. I think you'd enjoy it.
Why would I enjoy it? Because I like mortgage fraud?
No, because you like real estate.
Oh, thank you.
You like the history of real estate.
I do. No, I think I would. And actually, I like it's funny. I like American Greed and like the true crime story. Yeah, it's like the nerdiest thing ever. But
absolutely, all these people end up getting caught eventually.
You do. You just be honest and ethical, right?
Yeah.
Like it's pretty easy.
Yeah, it's a slower way to make money, but it eventually pays off.
Yeah.
Okay, so we talked about buying, selling for residential. You do a lot of work with investors as well. Tell us about the work you do with them.
Yeah. So most of the investors are multifamily properties, and I'm an investor myself. Mm-hmm. But it's a similar process to buying a house or selling a house, and that is asking the questions: what do you want to look? What are you looking for? What do you want to finance? How are you going to finance it? What's important to you? Are you looking for asset? Are you looking for a new asset? Are you looking to diversify? Mm-hmm. If you're looking to buy, are you looking for cash flow? It really depends. And so based on that, are you going to be an active manager, or are you going to hire a property management company? And so what I like to do is underwrite for my clients, just depending on their specific needs and wants. And so, I have a couple, we'll call it, I want to sound cool because I'm on your show, institutional clients, but really they're not really that institutional, but
okay.
I figured I'd just use that term. But
we'll go with it.
But they have a lot of money, and they both underwrite very differently. And so I underwrite based on their models, and
it's curious what's the difference in their underwriting?
One is more focused on a cap rate, mm-hmm. and that's important to them. They may use more cash to buy a place. Another one would be more concerned on their debt coverage ratio, and their cash flow. And so it kind of just depends. One will look at appreciation. One will look at mostly cash flow.
Okay. Yeah. Okay. So I suspect they're buying in different areas.
Different areas. We have and different property types, right? Some are looking at the luxury property types where they cash flow. There's not a lot of work that needs to necessarily be done. There's not a lot of risk and not a lot of upside in appreciation. Others are looking at more Section 8 housing, more lower income housing, where they're taking advantage of taking a property that needs some improvements, that may have some violations, and turning it into a good place for people to live at a fair price. So it really just depends on what they're looking for, the types of properties, how much they want to work. Typically, not all, but typically some of the more luxury properties require less work and less maintenance. Mm-hmm. Sometimes, not all the time. And sometimes some of the lower income properties may require more maintenance. And so it just depends on how active people want to be and what they're looking for. But again, you turn that into their entire strategy, what their portfolio is, because you don't want to put all your eggs in just real estate. You want to put it across different equities and different investments.
Yeah. Although you say it's a few successful real estate investors that have had all their money in real estate, they might beg to differ, but I agree. Diversification is a great way to preserve wealth, without a doubt.
Well, look, I guess I'm probably more risk averse, mm-hmm. And I think putting all your eggs in one basket just scares me. Yeah. So, to me, I don't know what the allocation should be. What percentage, and it probably depends on age and income and where you're living and kids, but what percent's in life insurance, what percent's in real estate, what's percent's in equities, alternative investments, bonds, mutual funds, ETFs. I don't know.
There's no right answer.
You're supposed to have the right answer.
No, the right answer is there's no right answer.
Okay.
It really depends on so many different circumstances, the person that you're working with, and all that stuff. So I assume a lot of your investors are local?
Most of my investors are local. I have a couple investors actually in New York that.
But they're investing in Chicago?
They are investing.
So most of your investors are looking to invest in Chicago.
Yes.
What's your take on the current issues with Chicago and Illinois fiscally and all these other, and kind of the direction things are going? Are people shying away from investing in Chicago? Do you still see the same amount of demand?
Yeah, I was talking to a client yesterday who, it wasn't Chicago, it was Lake County, who wants to move, who's doing a 1031 exchange from some places that he has in Lake County that he's selling to buy in more tax-friendly states. But look, I think Chicago is an amazing place. I think it's a great city. Certainly, just like any major city, there's going to be issues.
Yeah.
There's certainly crime, and there's crime everywhere. There's certainly, I think I read in Crane's Chicago Business, the income inequality in Chicago is greater than most other cities, which is a big problem. So I still think Chicago is a good place to invest. I think when you are looking at making investments, some people have talked about, I'm going to invest in multifamily or in properties in Florida. We'll save on the taxes. At the same time, you're saving on taxes, but you're paying a lot more in insurance. Property insurance in Florida is crazy, and property taxes in Chicago could be crazy too. So I think you have to look at so many different factors, and people talk about Chicago being a tough place to invest in the winter, but when they're here in the spring and summer and they're on the lake or they're on the river and it's hustling and bustling, or you're going to Gibson's in Gold Coast or Gibson's Italia. This isn't a plug for Gibson's, by the way, but I just like Gibson's. But when you're seeing people out and eating and just having a good time, it's
a fun place to be.
It is. It gets, every city will get some bad press. There's going to be crime. There's going to be terrible things that happen. But overall, I think Chicago is a great city, and I think Illinois is still a great state.
Yeah, I think so too. I mean, I'm sticking around for a while.
And I think our schools. I mean, when you think about even the suburbs, right? You think about the schools. They're just incredible. Not to get too personal. Can I get personal? Am I allowed to?
Absolutely, go for it.
I have my oldest daughter has special needs, and we moved from the city of Chicago to Northbrook because of the school district there. And when I think about inclusion programs, when I think about how, my daughter in preschool needed to learn how to walk upstairs, and the school was only one floor, right? And the school brought in a stair set for her to learn how to walk upstairs without us fighting, without us, just doing it. You realize that your tax money, 55% of your taxes go to schools and teachers. Yeah. And so, I think it kind of, so when you think about where to live and whether you like Illinois or don't like Illinois, you got to think about the overall picture, and you think about, again, schools and services for people with different abilities, and you think about how to advise, where you'd want to live, and what you don't just look at one factor. You have to look at multiple factors, is what I'm trying to say.
Absolutely. Yeah. I know we've had a similar experience with schools too. That's awesome to hear that. We was at a parent-teacher conference the other day for our older son, Noah, who's 6. And he's reading and all that kind of stuff, but they're like, well, we want to give him a little bit more guidance. So they set him aside, they give him extra reading attention. And we're like, well, how should we think about this? Like, don't worry about it. If you compare him to the average person or student at his age across the country, he wouldn't be getting special treatment. But because we're in the school district, we want to make sure everybody's above this limit. So that's really cool. So one thought I had about Illinois and Chicago and the trend is, if you look at 20 to 30 years from now, hopefully this isn't continuing. There's some kind of change to this, but if global warming continues its pace, I mean, we're seeing it now the other day. I mean, we're in February, it was 70 degrees.
Yes.
Yesterday. Could you imagine how's that going to be 20 to 30 years from now? We might have a reverse migration because it gets too hot in the South and too overcrowded. And plus we have effectively the most clean water, fresh water in the world.
Natural resource.
I mean, that could be a reverse trend, a decade, 2 decades from now.
That's their projection too.
Yeah.
Right. I mean, I love Miami, by the way. So for all the viewers watching this, I'm not I'm not saying anything bad about Miami, but they're
and they might be underwater. You never know.
That's what we hear, right? And so when we think about climate change, I do believe climate change is real, and I think we need to do something about it to hopefully reverse it. But I do think when you look at Chicago, you look at having water, having 4 seasons. Not talking about the hotel, but we do have a nice 4 seasons here. But you have 4 seasons. You have great education. I think more and more people will start coming back to Chicago. I think you'll see more corporations come to Chicago and the Chicagoland area in the future. I think people might get priced out of some of the coastal states when it comes to insurance. I think you're going to see, again, the rumors are Miami may be underwater. It's scary. So I'm pretty long on Chicago.
Yeah. I mean, things aren't cheap here, but the cost of living is still reasonable compared to San Fran and New York and that kind of stuff.
No, yes. I mean, Canada as well. I mean, Toronto is super expensive. Yeah. There's nothing is cheap. Everything is expensive. So, but again, I'm glad you brought up cheap and pricing and all that, because and that's where it's big into real estate. And it's big with a real estate agent. It's big with a financial advisor. Mm-hmm. You get what you pay for, right? Yeah. And so
saying what's cheap is expensive.
It could be. Yeah. And so but that's where you have to have somebody knowledgeable, whether it's in real estate, whether it's with investments, whether it's, buying a car, right? Mm-hmm. Having someone with that expertise to guide you, to make sure, what is it? Penny short, pound foolish, or
penny wise,
pound foolish. Yeah. You get what you pay for.
Yeah. Okay. Now, there's been some big headlines in the news. There was 1 or maybe 2 real estate brokerage firms that had to recently pay a massive fine, I think close to maybe $1 billion, for artificially inflating commissions. Okay. So what's your take on that? And then also with the future of kind of the work that you do and commissions, because within a lot of industries, you have technology coming in and squeezing profit margins for those industries. Do you feel like that's going to impact your industry? Are you worried about that? What does it look like 3, 5, 10 years from now?
Yeah. Well, and great questions. And there's a couple ways to unpack that, right? So first, you have the commission lawsuit, which I wrote about actually on LinkedIn before the settlement. I think it's a great thing. I think this is opening up the opportunity to be more transparent, to show who's getting paid, right? I can't tell you the number of agents who I've heard represent buyers who say, "Oh, you don't pay me, the seller pays me." Yeah. It's not true. You're a buyer. Again, you don't work with me. You could probably negotiate out 2.5% of the commission, or 3% of the purchase price, by not working with an agent. Now, you may overpay for the place, for sure. You may lose out on terms, or you may add risk. But the reality is, a buyer typically pays, whether they realize it or not, a buyer's agent. A seller pays the seller's agent. And so for me, not much has changed, right? Whenever I work with a buyer, I let them know this is how I'm being compensated. And we talked about this earlier. There's 3 ways I could be compensated by you, but right. When I work with a seller, and I've done this from the start. I mean, really since 2011. The commission is, I charge what I charge, and then there's a co-op. We can choose to pay the other agent or not. It's your choice. You've always had that choice. Yeah. And so in every agreement I've written, I certainly recommend paying a co-op, and there's a variety of reasons why I recommend it, but different scenarios.
Incentives, you're going to get less buyers if you're not paying the other person.
Well, right, but a good realtor is not going to steer away from, they'll find the best place for their client, but you separate it out, right? So if it's a 5% commission, as an example, you write in our agreement, every agreement that I've used, it's 2.5% will go to me, 2.5% will go to the other agent. And sign off on that, right? And that way you're being extremely transparent. And I think to me, that was the crux of the lawsuit. Commissions have always been negotiable. And I negotiate my commissions. Absolutely. Now, if if my commission goes way down, I may invest in a little bit less marketing because I have my margin. But it's weird that commission is a percentage, right? It could be weird, right? Because it could also be a flat fee. It could also be an hourly rate. It could also be an incentive-based model where, hey, if you sell my house for $900,000, I'll give you X commission. If you sell it for $1 million, I'll give you $100,000, right? I'll give you the delta between. Or, hey, my budget's $1 million to buy a place. Fine, if I find something for $900,000 that you like, can I keep 50% of the savings? So what I like about this lawsuit is I think it's opened up the eyes for the consumer to know that it's not just 5% commission or 6% commission or 7%. There are options that you have as a consumer. And a realtor, a good realtor, will give a menu of options. And so that's what I do, right? I give a menu of, hey, for this, I do this. For this, I do this, right? And so the consumer has a choice. So I think the lawsuit will weed out some maybe unethical agents out of the business. And I think the lawsuit will ultimately benefit both consumers and strong realtors with a fiduciary responsibility to their clients. Your second question about technology, which is a really good question. When I started in this business, and we call it in 2011, there wasn't as much technology, and my job was a lot harder. My job has gotten a lot easier as a result of technology. In terms of listing and marketing, hasn't made it any easier finding places for people, especially in this market. You still have to make your phone calls. You still have to door knock. You still have to send mailers out and prospect. But, as technology evolves, as the consumers get smarter about what places are worth, I think the realtors that use technology will prevail. And do I think technology will ultimately reduce commission or fees? Yeah, maybe not. I don't know. I think that, again, you should have somebody in your corner that's advocating for you. And if technology can do that, great. But I still think that, look, I worked for a large insurance carrier. Mm-hmm. I still rely on my insurance agent, on my homeowner's umbrella insurance, my auto insurance, to guide me in the right place, even though there's a bunch of technology out there. Yeah. Because you want to make sure you're covered the right way. Same thing with real estate. I think you want to have somebody that you could bounce ideas off of, and how technology changes that, I don't know. But maybe we go to hourly rates. I don't know. But I still feel like in any industry, there's going to be a need for a strategic advisor to help guide you through whatever process you're going through.
Yeah, absolutely. I mean, my industry is no different. For a long time, people have talked about fee compression, and there has been no fee compression. The thing that's changed is that we've just had to provide more services and use more technology. Right. So the cost on our end has gone up to get that same amount of revenue from the clients. Right. But like you said, like you work with busy professionals, and there's a lot of complexity in the work that you do. You're trying to make their lives easier. And, you deserve to be compensated well for that work.
I think very well, but
yeah, very well.
But well. So let me turn the tables and ask you a question. Sure. So when you say more technology, but so more technology, yes, you're spending more money, but is that also reducing the time that it's taking for you, right? So you can focus on finding other opportunities for your clients.
Yeah, no, yeah, it's for sure. I mean, there's definitely a very symbiotic relationship between technology and spending less time doing certain mundane tasks that nobody wants to do anyway.
Right, because so my technology will allow me to automatically send properties that are on the market to an investor. But that also then opens up the time for me to drive to certain areas to knock on doors and be like, hey, I see you missed a mortgage payment thanks to the technology. Would you consider selling, right? And so it just opens up more opportunities, I think, for us to do different things to benefit our clients in a different way.
Could you imagine in the near future you have like a Scott bot, and then they're the ones knocking on doors?
I think that'd be amazing.
That would be amazing.
I think just
You could be in multiple places.
I think the world would be a better place with a bunch of Scott bots.
I don't know about that. That's debatable. All right, well, that's the future of work.
Scott bots?
Scott bots. Well, it was good to have you on.
Thank you. It was a pleasure being on. Great questions. I appreciate it and appreciate the opportunity.
Sounds good. We'll talk soon.